materialize a larger loss than perhaps you had wanted it to. It is for this reason I urge you to consider variations of this method, such as adding with smaller stake size on the second, third, and fourth positions. You may ask, why add at all? Because by adding, I am actively combating the brain's proclivity to scaling down risk. Our brains want to take profit. I am doing the opposite. I am adding to my position. Real-life example. The following chart shows the Dow Jones Index on a trend day. I define a trend day as a day when the market opens at the high or the low of the day and closes at the low or the high of the day. The problem with trend days is that you won't know it was a trend day until the day is over. So you have to make an assumption based around what you see on the chart about whether you think it is a trend day. I have researched the price action behavior of the Dow Jones Index over 18 years. I have identified a handful of first-hour patterns, which I believe are precursors for trend days. One of those patterns is a gap down after a gap up day, where the gap down is not filled within the first hour. Figure 20 shows a positive Thursday. The trade I want to show you took place on the Friday. Friday is notorious for producing lasting trends, often leading to trend days, especially on Fridays at the beginning or end of the month. I have also included a screenshot of my trading monitor. The top line shows my overall exposure. It states I am short 3,000 in Wall Street. My average entry is 25,419.6. The current price is 25,135.9. The 3,000 means I am short 3,000 Danish kroner per point, which equates to about $500 per point movement in the Dow. So, for every point the Dow index drops, I make 3,000 kroner, and vice versa. For every point it rallies, I lose 3,000 kroner. At the time of the screenshot, I am in profit by 851,000 kroner. Below my total exposure, you see each of the entries, which add up to 3,000. If you look at the previous chart, you will see the numbers 1, 2, and 3. Those are points where I am adding to my position. At point 1 on the chart, I start selling short. I scale into my short position over 5 entries. Those are the first 5 entries you see below my total exposure. At point 2, I add more short positions. I do so because the market is weak and I am certain a trend day is developing. I add about 25% more to my short position at point 2. At point 3, I add about 10% more to my short position. As the market moves lower, I add to my positions, as I have been trained to do. I move my stop loss down as well. What you are unable to see on the chart is that initially the market moved against me. What I am doing here is critical to your understanding of fear. I have been underwater on my position, and now I am finally making money. My brain has had to endure pain during the loss period, and I am now being sent signals from my mind to relieve my brain of the pain it felt during the losing period, 15 minutes earlier. I counteract this pain by actively doing the very thing that causes me pain. I am embracing the discomfort by compounding it. This is required if I am to actively engage in behavior that is the opposite of the 90%. You will notice that my add-on is not a big position, yet it serves to reinforce the right kind of behavior. The Dow falls strongly. I am in the safe zone now. My core position cannot be threatened. My stops are placed at break-even. However, I am still prepared to let this trade turn into an insignificant trade, small profit trade, in the hope that it will turn into a significant trade. You must find your own level of risk temperance. Once I was asked, if you keep adding to your trades, when do you take profits? That is a great question. I use the charts to take profits. If I double bottom on a chart, and I am short, then I might be tempted to take profit. Alternatively, and this is a really good trick, I will place my stop loss where I would want to get into the market, but in the other direction. For example, in this case, if I am short the Dow Jones Index, I might place my stop loss at the price level where I would turn into a buyer of the index. Although I am 100 points in profit, I am by no means relaxing. I am adding to my position again and again in smaller increments in order to reinforce the right behavior. The trade had the potential to turn into a spectacular trade. It didn't. The Dow bounced strongly before falling again, and although I made a profit, it was not the amount you see on the screenshot. That is very important for me to get across to you, because I think it is important that you establish some criteria for how much of your paper profits you are prepared to give away in order to capture the really big days. There are days when I come to work and I just want to capture 20 to 30 points and then be done. Not every day has hundreds of points available in it. Then there are days when the market starts out very strongly or very weakly, and you think to yourself, this could be a really big day. I have a philosophy to trading that means I am prepared to sacrifice points in order to discover how big the profit can get. If you don't have that philosophy, you will never discover how big the profit can get. If you always think of potential targets using technical analysis, you are most likely just talking your way out of a good trade. You might be using technical measures to time your exit, but I don't subscribe to this method. There is a reason for that. When the market is trending and I am on board the trend with a position, I hope that the market will close that night at its strongest/weakest for the day. It happens on at least 20% of all trading days in stock indices. Yes, I have had plenty of disappointments, but I have had sufficient stellar days to make it part of my philosophy. DAX Index Trading Example. Let me show you another example of a trade where I added to my positions. However, this time I will show you what I saw at the time of the trade. See Figure 21. I am not on board the first push down. I look at the rebound for an opportunity to short the DAX index. On the next image, you can see my initial position entries highlighted in box 1. DAX finally caves in and resumes its downtrend, as shown in Figure 22. You can see my subsequent short entries in box 2. There are a couple of things I would like you to see here. 1. I am not afraid to sell short something that has already fallen in price. This is consistent with what the majority of people do not want to do. 2. I scale into the position in this example, and I add aggressively to my short position once my position is in profit. I urge you to contemplate how you can introduce the element of adding to winners into your trading. I am not interested in rewriting your trading plan. I am not interested in turning you into a copy of me. I am interested in trying to make you understand the value of pain in trading as a barometer for adding to positions. If it is uncomfortable, then it is probably the right thing to do. I will repeat something I mentioned earlier. I think you should give serious contemplation to the question of why people in general find it easier to add to a losing trade than a winning trade. I don't ever want to be accused of glorifying trading. It is a risky proposition. 20 years ago, most brokers in Europe didn't have what we today know as negative balance protection. Today, it is a legal requirement. It means that you can't lose more money than is available on your trading account. You can still lose a lot more than you anticipate, especially if you add to positions like I do. As you become better at trading, you will want to trade bigger and bigger size, and the market on a big position doesn't have to change direction by a lot before you give away a big portion of your open profits. If you want proof of that, here it is. This was a perfectly good-looking DAX position, which turned from being very profitable to showing a significant loss. It starts well with a short position at 11,288. I then add to the position as the DAX index falls. Then the market reverses, and I add a little more at the old top. At the point of the screenshot, I am short 4,500 kroner per point, and I am losing 25 points. I close the position shortly after for a loss. Uncomfortable. There are no shortcuts in the trading industry, any more than there are shortcuts in, say, professional sports. I expect to get uncomfortable during the trading. At times it feels like the minutes last for hours. My impatience to do something is raging within me. I am battling my own emotions more than I am battling the markets. Finally, when I am in a position, my mind has something to occupy itself with. Be careful what you ask for. Maybe the position is showing a loss, so now I am battling my subconscious mind, which wants the position to run a little longer. My conscious mind has a stop loss, but my subconscious mind wants me to remove it. It doesn't want to lose. It could be the position is going well. Now my subconscious wants me to take my profits. It loves the gratification of a good profit. So I am battling it whether I am winning or losing on my trades. The key to victory starts with being mindful of the existence of two brains. The ability to anticipate your enemy's next move is crucial. The subconscious brain is a rather simple beast. It just wants to avoid pain. For the subconscious brain, there are two pains in trading. There is the pain of seeing a profit. When it sees a profit, it wants you to close it because then it doesn't have to deal with the pain of seeing the profit disappear. Then there is the pain of loss. When the subconscious brain sees a loss, it wants you to hold on to the position a little longer and a little longer. Otherwise, it will have to deal with taking the loss. As long as the position is open, there is always hope. In a nutshell, what separates the 10% of winners from the 90% of losers is which brain they are listening to. It took me many years to realize this. I developed a system for my mind